Enterprise value. Enterprise value represents the entire economic value of a company. More specifically, it is a measure of the theoretical takeover price that an investor would have to pay in order to acquire a particular firm. Enterprise value is calculated as follows. Enterprise value equals market capitalization plus total debt minus cash. Some analysts adjust the debt portion of this formula to include preferred stock. They may also adjust the cash portion of the formula to include various cash equivalents, such as current accounts receivable and liquid inventory. For example, let's assume company XYZ has the following characteristics: shares outstanding, current share price, total debt, total cash. Based on the formula above, we can calculate company XYZ's enterprise value as follows. As you can see, company XYZ is valued at $5,500,000. When attempting to gauge the overall value of a firm, investors often look exclusively at market capitalization. However, in most cases, this is not an accurate reflection of a company's true value. Enterprise value considers much more than just the value of a company's outstanding equity. To buy a company outright, an investor would have to assume the acquired company's debt, though it would also receive all of the acquired company's cash. Debt and cash can have an enormous impact on a particular company's enterprise value. For this reason, two companies with the same market capitalizations may sport very different enterprise values. For example, a company with a $50 million market capitalization, no debt, and $10 million in cash would be cheaper to acquire than the same $50 million company with $30 million of debt and no cash. The PE ratio and other formulas commonly used to measure value don't typically take cash and debt into consideration. For this reason, it's sometimes called the flawed PE ratio. To get a better sense for a company's true valuation, many analysts and investors prefer to compare earnings, sales, and other measures to enterprise value. To learn more about how enterprise value is used by investors, don't miss our top 2 articles on the subject: The Best Alternative to the Flawed PE Ratio, and With This Ratio, Cash Flows Are Key.